tomorrow. We need to go outside our shores very quickly as global equities flattered, oil fell, and euro inched closer to parity with a safe haven dollar today as the prospects of further tightening by central bank renewed COVID outbreaks in China and Europe's energy shortages sparked investors. MSCI's broadest index of Asian Pacific shares outside Japan fell 1.3% to its lowest in 2 years, while Japan's Nikkei lost 2%. Futures also pointing to a weak open in the United States and Europe as US S&P 500 E- lost 0.6%, Nasdaq futures fell 0.7%, pan-region Euro Stoxx 50 futures shed 0.8%, FTSE futures slipped 0.44% by early afternoon. Hong Kong benchmark Hang Seng Index 1.21% to its lowest since June 17, while the mainland China blue chip CSR 300 lost 1.3%. U.S. Treasury Secretary Janet Yellen and Japanese Finance Minister Shigenichi Suzuki agreed today to further strengthen bilateral ties and work together to address rising food and energy prices exacerbated by Russia's war in Ukraine. They say the war had increased exchange rate volatility, which could have had adverse implications for economic and financial stability, and pledged to continue to consult closely on foreign exchange markets and cooperate as appropriate on currency issues, in line with their commitment as part of the Group of 7 and Group of 20 economies. The two leaders also urged China and other non-Paris Club creditors to cooperate constructively in working out debt treatment for low-income countries facing debt distress, and underscore the need for coordination to ensure fair burden sharing among creditors of Sri Lanka and other vulnerable middle-income countries. Their joint statement also touched on issues ranging from climate change to global tax reform and a price cap on Russian oil that the United States has proposed to prevent Moscow from benefiting from using higher oil prices to fund its war in Ukraine. And almost finally now, Twitter Incorporated has fired back at Elon Musk in tweets of events, accusing him of knowingly breaching an agreement to buy a social media firm, days after the Tesla Incorporated chief sought to back out of the $44 billion deal. In a letter sent to Elon Musk, dated Sunday and filed with regulators on Monday, Twitter said it had not breached its obligations under the merger agreement, as indicated by Elon Musk on Friday, for looking to end the deal. The company has planned to sue Elon Musk to force him to complete the deal, a threat he laughed off on Monday when he sent a series of tweets joking about Twitter and its threat to enforce the agreement in court. Twitter is planning to file a suit earlier this week in Delaware. Twitter's shares ended down 11.3% at $32.65, a 40% discount to Elon Musk's $54.20, that's $54.20 bid, and the biggest daily percentage drop in more than 14 months. They rebounded less than 1% in extending trade. Oil prices in the international market fell today as fresh COVID cases curbs in China are the world's biggest crude importer, and fears of a global economic slowdown weighed on the outlook for fuel demand. U.S. West Texas Intermediate crude recorded a price drop of 2.56% to hit $101.40 per barrel. Brent was at $104.70, registering a downward price margin of 2.25%. Bonnie Light's performance is continuing with a losing streak, selling at $118.10 per barrel, with a dip in price of 3.25%. For the OPEC basket, crude oil dealers offer $114.30 per barrel, recording a price increase of 0.3%.